Hi, this is Joseph. It's Monday. It's December 7th, and I want to talk about a email that I received from a prospective trade copier uh, subscriber. He sort of voiced his concern about some of the other trade copier services that are out there and signal services that are out on the internet. And he had asked me some very specific questions about how it is that I go about recovering from a loss and how is it that I trade. Do I have a lot of open trades all at a single time? How am I doing things? And then he went on in the email not only to ask me these questions, and he was very precise about what he wanted to know about my service and my trading style, but he also mentioned his previous experiences with other trade copier services and signal services. And he told me that in the most recent signal service that he's used, it was like a trade copier. As soon as he connected his account on the very first day, he saw, I believe, it was like seven trades that were open almost immediately, like within just a few minutes. And he said it was kind of random. And he became pretty suspicious right away at watching the pattern. And the reason that I'm sharing this with you is, first of all, if you're considering using other services, or if you're using another service that is similar to what I'm describing, please be very careful. And also, if you have not subscribed to any of those services, ask them questions. I highly recommend, one of the first things that you want to do when you're considering somebody's signal service or trade copier service, ask them questions about how long they've been trading, and ask them, not just about drawdowns, but ask them details. Because when you talk about drawdowns, or you ask, people questions like, what's your max drawdown and things like that, and you move on to the next question, don't be afraid to press somebody on giving you answers about their personal approach to trading, because you want to understand that, first of all, if someone is going to be trading for you through the use of a trade copier, let's say it's not a black box automated system, somebody is manually executing those trades. That's what mine is like. My trade copier is actually me trading for you. So very often I encourage my subscribers, when they start asking me questions, ask me as much as you want to ask me until you're comfortable. First of all, it's going to make the experience you using the trade copier much better, and it's going to be better for me. I'm going to have a better customer, right? I'm going to have a better subscriber who understands me and who's willing to let me trade. Very often I get subscribers that are brand new in the business and they buy it right away. They don't ask me any questions, and I can kind of tell by the way that they're if they do ask me a question, I can kind of tell if they're kind of new. Sometimes I can tell. And they're asking me real generic questions, but the questions that they're asking me are usually based on what they see that's already out there from other people who are trying to pitch and sell services that are similar to mine. And then they get the wrong idea. They get the wrong expectations about how much profit can you make? What could I expect? What's the trading day going to look like? How do you trade? How often do you trade? When do you not have trades? Things like that. They're kind of asking me funny questions, and not that those are funny questions. That's what I would want to know myself. Like, I would want to know, are there times when you don't trade? If you're manually trading, it's got to be pretty exhausting work. When do you take a break? I would want to know those kind of questions so that I could be prepared when I look at my trading account, when those trades are likely to come in. So I trade during the London and the New York session. Those are my two primary trading sessions, and they generate the bulk of my profits. I very rarely will trade during the Asian session unless something's going on and it's some kind of crisis event or something like that that requires me to stay a little bit later and trade. So this gentleman was telling me that he's using this service, and they immediately opened up like 7 trades, and then they opened up a few more a little while later, more trades. So this guy has this trading account, and he's not prepared for how many trades are going to be open all at one time. And you have to be really careful, because if you don't have the settings dialed in right on a trade copier, and you're letting somebody execute a bunch of trades, it could wipe out your account. You use all and deplete all of the available capital that you can have open on a trade. It doesn't take much for the market to turn and have most of those positions become negative, and it could wipe out your account. You got to be careful with it. So you have to ask as many questions as you want, until you're comfortable. And if they can't answer your questions and they can't tell you specifics about their trading system, chances are they probably just don't have that much experience, to be totally honest. I'll tell somebody my entire trading system, because I know how hard it is to actually implement it. It's a lot of work. It's not that it's confusing and complicated. I've stripped it down to total simplicity. I've been trading for 20 years, so I use very classical, old school technical analysis skills. I'm going to show you in just a moment one particular trade this morning, but I just want to pass along some information so that way you know how to prepare yourself for, whether you're inquiring about another service or mine, but just prepare yourself for some of these ideas and these concepts and what's going on out there. This gentleman who is a prospective subscriber of mine. What he wrote to me in this email and what he experienced with this company, this signal service provider, executing a lot of trades, that's not the first time I've heard that. I've heard that quite a bit over the last couple of years, and honestly, far beyond that. But lately, it just seems like there's a lot of people trying to sell signal services and trade copier services on the internet. They're on Facebook, they're on Instagram, and they're really working it to try to make extra money. I guess some of these people are not working. There's a lot of people unemployed, so people are trying to make money anywhere they can. Not everyone, obviously, but a majority of the people are really struggling. So you have to be really, really careful. And some of these people that are out there that are offering services like mine, they just don't have the experience. They haven't been around long enough, and they haven't traded long enough. And I'm not saying that you can't figure out how to trade, but once if you're brand new, let's say take me for example. If I had just started and I had only had 6 months experience, but I knew where to go to get the experience, that might have helped. But the minute the market changes into something, in a crisis event or a crisis environment where I'm not familiar with that can create a lot of challenges. You just don't have the experience. Well, I've traded through the global financial meltdown and every minor and major crisis since and before. So that really does help a lot. It gives you some solid insight as to when you should step in and start trading because you can see it's safe, and then other times when you should just stay out of it. And that very often, what I notice is when I stay out of the market, a lot of inexperienced traders continue to jump in, and then they get burned, and they grind away at their account, and they end up. I was going to say they churn their accounts. They have some losses and some gains and losses and gains, and it just gets really exhausting. So be really careful. If you're using a signal service where they're executing a lot of trades, this is what the gentleman ended up saying in the email. He suspected that what they're doing is they're not putting any take profit targets on it, and they're not putting any stop loss on it. And then they're executing all these trades, hoping for some of them to go positive and to, show some profits. And then they'll close those trades out, but leave the negative ones open, and they just let them continue to run. So he says that it doesn't seem that there's any rhyme or reason to it, other than the fact that they may have looked at the charts and just decided to execute trades across the board on most of the major Forex currency pairs. That's not a very good idea. So I first of all want to say that his question was, how do I handle a loss? Do my losses continue? That was what he was asking me. Do my losses continue? And how do I stop them? How do I stop my losses? Do I have something in place that would allow me to regain control and composure, whether it's a psychological issue that I'm experiencing or if it's just a breakdown in my trading system? So I went through all of these issues back in 2001. I actually hired a professional psychologist. They were a psychologist that worked exclusively with traders. It was an expensive process, but it helped me enormously. So a lot of the psychological issues that most people experience and that I had when I first started trading, I was able to eliminate those. And it took a lot of work. It was a lot of work. It was very expensive to work with this coach, but it helped. So, not everybody gets the advantage to work with a psychologist or that exclusively works with traders. It can be very expensive. But just know that, psychology is one side. When you start to see a string of losing trades over and over and over again, let's say you got 7, 8, 9, 10 trades. I remember doing this back in 2001 when I first started trading. I had every single trade was bad. This was before I hired my coach, my psychologist coach. So I just kept thinking to myself, this is, I suck at this, and this is really bad. That was the self-talk, and it wasn't helping, and I didn't know what to do in place of it. So I don't, think in those terms any longer, right? I accept a loss, the occasional loss, as just part of the game. That's part of the business. But the ability to recover from a loss shows how efficient the trader is, number one, in their trading system and also in their psychology, which in order to develop the proper mindset and psychology, that can be pretty time consuming. It doesn't happen overnight. So that also shows the amount of experience that the individual has behind it. So please be careful with some of the trade copier services and signal services that are out there. There are a lot of them out there, and they sound great. They're making great videos. I watch some of them. They make great videos. They have great Instagram pages. They're showing lots of flashy cars and jewelry and all kinds of stuff that you might be thinking that that's actually coming from their profits from Forex. very often it's not. It's not. And there's a lot of videos that, talk about a lot of these people that just don't have enough experience. I'm not the only one saying this. So please be very, very careful with the selection of the trade copier service or signal service that you're using. Ask them a lot of questions. Don't be afraid to ask them questions. And if they don't answer you, then it's probably not a good idea that you use their service. They should be able to tell you precisely what it is that they're doing. If I have a loss, I can recover from the loss quickly. It's just a matter of waiting for it. I don't chase price immediately when I have a loss. I want the money back for sure, because the loss that I experience is also in my own personal trading account, not to mention it's also affecting my subscribers. So I will stay longer if I feel that there's going to be, meaning that I will put in a few more extra hours of work if I feel that the market's actually going to provide an opportunity, another signal, another setup for me to earn back that loss. But if it's at the end of the day, and I can see that, volume levels have dried up and there's just not a lot of participation, it's going to go flat, then I'm not going to continue to just try and chase and scalp to get back that loss. All I have to do is wait for the next session when there's more participation and there's more volume, because as traders, in order for us to profit, we need price to move further, right? You need to move, price needs to move in whatever direction you're trading it in. There needs to be participation. There needs to be volume. There needs to be momentum. There needs to be people backing that move in order for us to earn profit. So if you want to earn 3 pips, then you can scalp, and you can probably do that most of the time. And if you want 1.5 pips, you can scalp, and you can probably do that, every so often. But when you want to see price move 20, 30, 40, 50 pips or so, that's going to take some momentum. That's going to take some participation, and there's very specific times and turning points that you need to be able to identify to catch a trade like that. So what you're looking at right now is the pound. So I experienced a loss today, but I was able to get back into another trade here on the pound to start earning back that loss. And it didn't take much time from the time that I had the loss to find this next opportunity. So this is the pound, and before I move on, some of you have already seen these charts. I trade futures. So when I started my career back in 2001, I actually started trading the S&P E-mini, and so I started trading futures, and I found out about Forex about 3 months later, and I've been trading both ever since. So I started trading currency futures at the same time that I'm trading spot Forex, like the pound dollar, on the MetaTrader platform. So I'm doing both of them simultaneously, and what I found years ago, back when I first started trading futures, is that my trading system and the way I trade, what I need to see personally, and everybody's different. Every trader, looks at something else. Not all of them are going to be looking at the same thing. But for me, I need volume. I need true volume when I'm looking at futures. I need to see that transparency. I need to see that because it really gives me some kind of I guess some people refer to it as a footprint, right? It tells me what is going on in the marketplace at any particular given time based on how I read and use volume indicators. So I have 2 volume indicators down there at the bottom, and you'll notice that this is not tick volume. This is actual futures contracts traded. This is the pound futures. These are futures volume. So there's a lot of transparency, a lot of depth here, and I can find these turning points, like let's say up here at the highs or down here at the lows. So this was the trade that I was able to trade, was this reversal right here off of the lows. So you'll notice this morning there was a lot of talk about the Brexit and stalling and the whole thing over the weekend. We heard that, and it had an impact here on price. As the market was opening, the London was open. Just prior to, there was a lot of discussion. A few people had made some comments about the Brexit discussions breaking down and just all kinds of stuff. So we could easily see some kind of a move right here to the downside. And when that move stopped, well, a lot of people are hoping that it's going to continue, especially with a strong volume candle like this. But one of the things that I noticed here is that this is a range of consolidation that I've had in place. You can see my charts. I've had this in place since November 23rd right here. So this is November 23rd, and this continues to move sideways, and this is a pretty solid range of consolidation. And there was a few attempts to break above, but nothing really went anywhere. It just kind of spiked up, and these up thrusts that sort of shorten at the same time, they also fail, and they really don't go anywhere. There's no follow-through, even though we see a lot of participation on some of these candles. And then it reverses and comes back inside of consolidation. And that tells sort of a story in itself, that it's still not ready to break out of this range. And ultimately, even after what we saw today, we still see it right back inside of that range of consolidation. So at the end of the day, we're going to take a look at this. and look at the daily candles. But what this provided me as price was breaking down here and attempting to take out the low here from November 23rd, well, there was a lot of volume, there was a lot of participation, there was a lot of movement here, but it still didn't go anywhere, and there was no follow through. So that showed me, along with the way I read these volume indicators, a possible turning point. At that point, I switched to my point and figure chart. This is my point and figure chart, and this was the trade right here at the lows, and this was the turning point. And you can see how it sort of went sideways and created a little range of support, a little range of resistance in here. And then here it really starts to solidify, and it gives me an opportunity right there. One of the first things before I continue, if this is the first time you've seen my point and figure charts, I do use point and figure to day trade. I pinpoint precise entries with my point and figure chart. But you'll notice that in the prior chart, I was showing you a bar chart, and I was watching volume and noticing the overall structure of that consolidation phase. That's what helps me find these turning points. So at that point, once I have everything in line and I can see the consolidation, I can see that price attempted to take out the lows on the prior chart, but it failed. It really didn't go anywhere, but there was a lot of volume, but no follow through. Then that sort of kind of gives me an indication that I need to sit up and pay attention, because there could be a reversal at that level. Because of the way volume behaves along with that momentous move to the downside, but it just didn't take it out. It couldn't close below that support from November 23rd. So again, at that point, I start sitting up and I watch and I see price moving around. Now, another thing about point and figure, this isn't based on time. So each one of these columns is not a specific length of time. It is based on the volatility that takes place, the action that takes place. And that is based on how I construct this chart. So the way you construct your point and figure chart is very, very important. It's actually critical to your trading system so that you can spot these turning points and get these entries, and they'll pay off like this. The other thing that point and figure does, and this is where a lot of people, I think most people that are not familiar with using point and figure but understand what it is, they generally think that point and figure is a way to use it on a larger time frame, and it will give you a projected price target. And the projections, the price targets that I get as a result of counting these columns and finding these precise day trade opportunities, they're very, very accurate. Not only that, not only is it extremely accurate when I find price targets, but it's also very accurate in the sense that when I find a solidified range of resistance or support, I'm not tempted to go long or short at certain locations based on the way I see support and resistance. It keeps me out of head fakes very often. So this is, this is what I use. This is what I'm doing with the trade copier service. This is the strategy, and these are some of the tools and the techniques that I use when I execute trades from my own personal account, which, of course, is the same thing that all of my subscribers are getting when they use the trade copier. When I execute a trade in my account, the trade copier will execute the same trade for you in your account. So this one here, I just need to wait for it, right? I can see the retracements. I can see the level of resistance right here. This is just above the 80, the 1.3280 level. And it starts to bounce around there, and we get these retests of this little level of support here. And then I drew a line here. So, there's a trend line in here, and it held really nice. I'm going to pull it out here to the right, and you can see how the rest of the day unfolded. But again, this is what we refer to as, so there's different types of entries, but this is a bullish entry. This is a bullish candle, these X's right here, and this is giving me my entry at approximately 93. So 93, and based on the count that I have, and I have multiple counts, right? We want to have a conservative count just in case, and we also want to have an overall count. So there's different ways to use these columns and to identify these counts. Another way to look at the count is how much fuel is in the tank. How far is price going to go once it really starts to pick up momentum and it starts to go in the opposite direction? Remember, we're trading it in the opposite direction from what we saw here. Earlier in the morning, what we saw was this candle looked, sorry about that, this candle looked just like this. And at some point in time, and I can tell you that back when I first started trading, if I would have seen this, I would have expected price to continue lower. I wouldn't have been able to, I didn't have the ability to pull together all of these little components like this key level of support and how to read, the volume levels and is this likely to be some kind of a turning point, and paying attention to where this candle closed in relation to support and resistance, giving me these little clues that this is an opportunity for me to sit up and pay attention to a trade that could give me a good solid move just like this. So the entry, again, the minimum count or the conservative count was an entry of 93 with a target of 41. But ultimately, there was a second count here at 71. Now, I have a much deeper count that goes further if price is going to continue to go higher. And again, I mentioned that on the prior chart that at the end of the day, we're going to take a look at the daily candles to assess the conditions and see if there's any candlestick patterns or bar chart patterns, anything that might line up at the end of the day on the daily time frame that would give me some indication of what I could expect for tomorrow. And then, of course, I'll come back here and look at the point and figure chart to try to assess the account to see if it's going to go even further or even higher, I should say, or is it going to reverse and come right back down and stay inside of consolidation. There's a few things that I'm going to be looking at the end of the day. But if I move this out, you can see how it ended up ultimately hitting that area of 71. Now, this right here shows a high of 70, but the bar is actually over here. This is my other bar chart, and you'll notice that here it actually went to 71. Sorry about that. See if I can grab that right there. Sorry, it went to 72. So on that spike, it went to 72, but the point and figure just shows a high of 71. I'm sorry, 70, but it did hit a high of 72. So it cleared the target of 71. And the reason that it looks like that, again, if you're not familiar with point and figure, the reason that the bar chart showed 72 as a high, but the point and figure only showed a high of 70, is that there isn't another change or there isn't another X added to the bullish columns until there's some significant change in volatility based on the way that I construct this chart. There has to be some kind of significant change, and that's what creates these really solidified levels of support and resistance. And because of these levels of support and resistance that are very solidified on the point and figure chart, as I'm watching the point and figure chart, well, I'm not over here looking at just a candlestick chart, because the candlestick chart by itself, those wicks, sometimes those wicks are enough to bait traders into going long or short when it could potentially turn into a head fake. So you'll notice that, again, the point and figure has very solidified levels of resistance and support, but if you look at a candlestick chart, very often you'll see the wicks, even though the candles will close there, but the wicks sometimes are like temptation, right? When you're looking at an open live candle and you see it poking through a level of resistance, you're thinking, oh, here it goes. Maybe it's time to step in. I got to get in here, or otherwise I'm going to lose the trade. And you get in and you go long or short, and then it turns around and comes back down inside of consolidation and you get stopped out. Those are those head fake moves. I hate those. And I used to get stuck in those all of the time back in 2001. That's where I started really focusing in on learning about consolidation. And I learned the different phases of consolidation so that I could read the charts like this. So again, the point and figure keeps me out of trouble. It helps me avoid going long or short on those head fake moves. So let's go ahead and continue this example here. And again, this is immediately after having a loss. So I'm able to earn back the loss on the very next trade or two. And sometimes when I say two, it might take two trades, because let's say that the next trade I get isn't a point and figure setup. Let's say that the next trade that I get is actually like an HL30. Well, the HL30, each one of my strategies, each one of my techniques that I use has a very precise target and a stop loss. So I have a trade plan every single time. It's not a matter of just looking at price and watching volume and trying to jump in when I think it's going to move. That's not what I'm doing. I'm waiting for these trade setups to come to me. I won't do anything until I see my signal, my trade confirmed on the charts. And I'm watching 8 different currency pairs, and now I'm trading Bitcoin, I'm trading the indices, I'm trading gold, silver, oil as well. So there's going to be plenty of opportunities. So again, going back to this, it's just a matter of waiting for it. But if it would have been, let's say, something like the HL30 strategy, well, that has a 20 pip target and a 20 pip stop. And if that was the only technique that developed this morning, then I would have only earned 20 pips. So there's nothing wrong with that, and that could certainly replace a loss of 20 pips. But I wanted to point out that each one of the techniques that I trade is going to be a different target and a different stop, and it's all depending on whether or not I see the signal and I can confirm it. So I just have to wait for it. Now this went a lot further. This retracement here was pretty strong. Like, that was a pretty strong move. It went from a high of 33.67 to a low of, sorry, that's not the one. There was another one. This is the one that I was looking at. So this retracement here, this pullback, the way it retested these levels before bouncing and going back up again was pretty deep. And sometimes you'll see that happen on the pound dollar. Sometimes it'll happen on the euro dollar, but it happens quite a bit with the pound dollar. You might get into a trade. Let's say you get a second entry, you missed the initial opportunity and you're thinking you're safe. You get a second trade. Well, at that point, you've really exposed yourself quite a bit, and the retracement could be pretty sharp. It could be 60 pips, it could be 70 pips, it could be 80 pips. And sometimes people, when they're traders, and when they're trading in environments like this, they're going to use a pretty small stop, and they get stopped out pretty quick, and then it'll bounce and go right back up to the expected levels anyway. So this is what happened later on in the day. You can see that, again, this little pullback was pretty sharp, and then eventually it just picked up that momentum and pushed right through that 3,400 level. So that 3,400 level was actually a level that I was watching this morning. I could see that it was likely, even when it was back down here below 53. It was pretty obvious. But again, you have to be able to find your locations and take profits at these specific levels, and then wait for the pullback, right? Because we didn't sit through this, and then there's going to be other opportunities to trade this and grab the additional extension, the second leg of that move to the upside. So again, this is where we are currently. Price is sitting here at 1.3380, 81 right now. So at the end of the day, I'm going to come back in and I'm going to take a look at the charts. I also have my point and figures set up on a larger scale, on a larger time frame, so I can look at the bigger picture and try to determine what's going to happen here. But again, we're also going to be looking at bar charts or candlestick charts. Now, I prefer bar charts, but I do also, as you saw in the other chart, I do have candlestick charts just to get an idea when I see some of these, like an evening star or morning star and engulfing and bullish, bearish engulfing candles, things like that. So all of those little things kind of help with the visual aspect as I'm scanning through the charts looking for an opportunity. But the keys to getting into the trade are going to involve volume, the way the candles close in relation to support and resistance, the consolidation phase and the structure that I'm actually trying to trade within or outside of, and then waiting for the point and figure to give me my clear entry, which is exactly what you saw over here. And you can see just how effective it is. And you'll notice how price stops at some of these levels. It's really interesting when you learn point and figure how effective it is. And it's like this all the time. Like, this isn't a system. Using point and figure isn't something that just stops working after a little while. I know a lot of little simple trading systems. I used to refer to them as fad trading systems because people would put them together. I noticed that traders were just trying to sell other people. And this is back when I got into the business too. I bought some of those programs, and some of them were a joke. They were never going to really work. I mean, they were really kind of stupid, for a lack of a better word. I remember buying one program back in 2001. It was a PDF, and this guy was selling it. And basically what it was the correlation between the euro and the dollar. So sorry, the euro and the pound. So he was watching price one day, I guess. He wrote his story. He was watching price, and he could see that the pound dollar was moving up one day, and then the euro dollar wasn't. And about 15 minutes later or so, the euro dollar started to pick up momentum, and it started to move in the same direction. That was his trading system. He sold that to me. I bought it. I'm kind of embarrassed to talk about it. But, it can work to a certain degree, but that's not something that's reliable. That's not like classical technical analysis. He didn't give any description about, if you're looking at support and resistance, if you need to look at volume, if you need to find, these different phases of consolidation. None of the old school traditional technical analysis. He wasn't talking about it. He didn't know it. He couldn't teach it. He just said, watch the euro dollar and the pound dollar. If the pound dollar starts to move during the London session, wait a few minutes, and then when you start to see the euro dollar start to move up, buy it. But he didn't have a target. He didn't teach targets. He didn't teach where you would place your stop loss. He didn't teach any of that. And it was really a joke, but it's just to give you an idea of how much crap is out there. And it's just generally from people who just want to sell something. Like, they're interested in Forex, I'm sure, and they're interested in trading, but they haven't figured it out yet. And they're not that good, obviously, so they're just trying to sell something that they see, some kind of pattern that they think makes sense and might repeat, but they haven't tested it. They certainly aren't going to test it for 8 or 9 or 10 years. They want money immediately, right? So they're going to sell it, and they're going to package it. So be careful with some of the stuff that's out there because, it really isn't going to work. But when you start applying things like classical technical analysis, you're using point and figure. Again, I have a coaching program. I do teach how to use point and figure to day trade the Forex majors, and it works. It works like this all of the time. And the interesting thing about this is that all of us who use the point and figure, my coaching students who use the point and figure, we all get the same results. We all see the same patterns. And that's not something that you can say usually takes place with other trading systems where they're using candlestick charts and they're using indicators like moving averages and different indicators at the bottom of the charts, because everybody's going to use a different indicator and everybody's going to get a different signal and they're going to get a different target and a different stop. But when we use point and figure, we all use the same stop and we all have the same take profit levels and the same entry. That's what's so fascinating and interesting about point and figure, is that it works like that all of the time. And it's been working like that for years. So this is a really old school trading methodology, and we can refer to it, I guess, to a certain degree as indicators, certain things that we can use to apply to the point and figure to help us confirm some of these trades. And these techniques have been used well over 100 years. And the other interesting thing is most of the traders, some of the best traders in the history of trading, have used point and figure, and they all did it by hand. They created their point and figure charts by hand. I actually do my own point and figure charts by hand. I don't do them that often, but I did when I first started, and it was an amazing opportunity to really gain insight as to how and why point and figure works. So hopefully that'll answer your question. Again, please be careful with some of the trade copier services and signal services that are out there. If you're considering, it doesn't matter if it's mine or somebody else's, ask them all of the questions that you want to ask them until you're satisfied. They should be able to stop and take the time to really give you answers, and they should be able to tell you about their trading psychology and trading philosophies and their experience, and they should be willing to share that with you. I've been trading for 20 years, and I'm very proud of the fact that I was able to stay in this business for the entire 20 years. I never had to go out and get another job because I was losing money as a trader. I lost money in the beginning, but I started with a substantial trading account. I sold a business before I got into this business, the business of trading, so I was well funded. But I was depleting through my funds quickly in the beginning of my trading career, and I had to figure out how to stop that. Otherwise, I would have ran out of money, just like a lot of people do, and it's a scary situation to be in. So please be careful. Again, if they're ignoring you, if the other signal providers are ignoring you, chances are they don't have answers. And the other thing is, if you're using a service and you're noticing some really interesting patterns and behavior with the trades, if you see 7, 8, 9, 10 trades popping up and there's no stop and no target, chances are they don't have any clear direction. They're probably just looking for trades that are going to produce profits, and then they'll close those, but they'll leave the negative bad trades open, hoping that those will eventually become profitable as well. And it's a nightmare for people. It ends up blowing up people's trading accounts, and sometimes it starts strong. You might jump into a service where they're having just by chance they're having a good day, and other times you might start a service and let's say it's a bad day for that service. It doesn't mean that it's bad. You got to give it a little bit of time, but just be prepared for these different possibilities. So hopefully this will also give you some ideas about how I handle losses. Again, when I have a loss, I'm not going to chase it. I want the money back just as much as anybody else does, but I'm not going to chase price without having a clear signal, because I don't know where to take profits if I'm just following price. It gets pretty difficult if you're just chasing it up and down. You just got to grab whatever you can, and that's not going to help you earn back your losses efficiently and consistently for 10, 20, 30 years if you want to trade and be a trader for, in this business for as long as you possibly can, if this is what you want to do exclusively. Or if you're using a signal service that you're hoping will generate more cash and more profits in your account while you're working. Let's say you operate a business or you have a full-time job and you don't have the time to trade. That's one of the great things about trade copiers and signal services, is that it provides and fills that gap. If you don't have the time to trade, then let somebody else trade for you through the use of a trade copier like mine. But you want to find the right people that know what they're doing and aren't going to be blowing up trading accounts and can earn profits like this consistently. So hopefully, again, if you've got any questions about any of the information, hopefully this helps. And if you've got any questions, send me those questions. Send them straight to my email, and I'd be more than happy to answer. Usually I'm trading during the London and the New York session, so I try to turn off all distractions possible. I don't watch television, I don't watch movies, and I don't, join Facebook groups and do a lot of chatting. I stay away from all of that because it can be a big distraction. So I'm just watching the charts, I'm paying attention, doing all my technical analysis work on the charts, waiting for the next opportunity. And again, I'm trading multiple markets now, Bitcoin, silver, gold, oil, and then the indices along with the 8 major currency pairs that I trade. They're all on the website on the homepage, and it'll list everything that it is that I'm trading now. I actually use Hugo's way. I get the other question more often lately now that we're using social trader tools, what broker are you using, or who do you recommend so that you can get all of these trades in all of these other markets? And I'm using Hugo's Way. There's other brokers obviously that offer it, but the one that I'm using and quite a bit of my many of my subscribers use is Hugo's Way, and they're pretty reliable. Everybody that I know from the United States that has opened up an account with Hugo's Way and has tried to withdraw profits or close their account hasn't had any problems. They've actually told me that. I've spoken to my subscribers that have told me that. So everything seems to be fine with Hugo's Way at this point in time. Again, I can't guarantee how things are going to be in the future. Everything changes, especially I think as a trader, if you've been in the business for a long time, you expect change, right? You're always on your toes, ready for the next change and the next direction. But anyway, so far things seem to be going really well with Hugo's Way, and that's the broker that I recommend. I'm not an introducing broker. I'm not an affiliate. I don't get any money for that. Just, if you want to participate with my trade copier and you're looking for a good broker that will allow you to get these additional trades as I execute them in Bitcoin, indices, commodities, and Forex, Hugo's Way would be the one that I would recommend. Thank you for watching this video. If you have any questions, please send them to me.